Okay, hi everyone, welcome back. And in this update, we are going to check out QNT's price chart and see what is going on in the short term. And I think we are starting to have a decent bullish pattern. But before we get into all that good stuff, at first we are going to talk about this very important tweet from Mr. Gilbert Verdian and also the article that was published on QNT's website. So, are you ready? Let's dive in and see what is going on. And in case you missed it, recently there was actually a really important panel discussion at the Innovative Finance Forum called Capital Markets, the Road to Digitalization. And this event actually brought together some serious players like, for instance, BlackRock, the London Stock Exchange, Finality, and of course the man himself, Mr. Gilbert Verdian from Quant. Now, in my view, what makes this event so important is that it clearly showed something very huge. The experimental phase of blockchain in finance is absolutely 100% over, and from this point moving forward, it is all about real implementation. We are talking about large institutional kind, and we are going to break it down in today's update and talk about what is really going on in the world. So I think the first important point about this event is that they all kind of agreed that UK is at a major turning point, and the panel basically said this: ignore the headlines saying London is losing ground. The fundamentals are still quite strong. Personally, I'm not really sure about that, but let's just go with what they say because they usually have better information than us. And BlackRock alone has over $500 billion invested in United Kingdom, and regulation is finally catching up with the technology, and that's kind of a big deal because for years and years, regulation was actually the main thing holding progress back, not only in UK, I would say generally in the whole European Union, but now it is fully turning into an enabler, and that, my friends, is why big institutions are moving with confidence. Now, the second important point about this event was that they all agreed that the problem right now is not the technology. It's actually the people and the old system. Because you see, I think we can all also agree that the technology is absolutely ready. And I would argue that it has been actually ready for quite some time. And by technology, we are basically talking about blockchain, tokenization, all that good stuff, which is fully functional and working. But the bottleneck is in talent and integration. Most finance teams still do not really understand how this new technology works. And banks, well, unfortunately, they are still stuck running on old legacy systems. I mean, think about it. If you do something, let's say for more than 20-25 years, that is going to become a habit. Now, try running a legacy system for more than 40-50 years. Changing this process is going to be quite painful. Obviously, there are going to be some major frictions, but this is the path forward and there is no denying it. But it is going to, in my view, probably take some time, and you cannot really just switch those old legacy systems off instantly. No. In fact, they actually even mention in this article the Australian Stock Exchange, which lost about 250 million euros trying to rebuild every single thing in one big move, and unfortunately it failed. And that, my friends, is why now the focus is on small step-by-step integrations, not massive risky overhauls, which means, well, we are on the right track. But again, you want to remember this process will probably take some time. Now, another very important point that they talked about in this event was about the real opportunity, which is basically, they said, securitization. And according to these guys, when they are talking about tokenization, they are basically meaning securitization. And by that, they are talking about turning every single thing and all kinds of assets, like for instance, real estate or maybe private equity, into tradable digital tokens. And that means, number one, faster transactions, number two, 24/7 markets, and number three, access to asset classes that were previously off limits. And the panel made it very clear. London has a real shot at becoming the global hub for digital asset settlements, but only if it moves really fast. Now, at this point, you might ask, well, okay, why should we care about this? Because there is a very loud and clear message in here, and it's this: digitalization isn't optional anymore, okay? if London is not going to take the lead, other countries will. And whoever gets this right first, well, okay, they are going to most likely attract the next wave of global capital and innovation. You see, right now, our traditional systems still take about 1 or 2 days to settle a trade, but with digital settlement, okay, we can literally change that 1 or 2 days to almost instantly with basically a snap of a finger. And that, my friends, will free up liquidity and also cut huge operational costs. And this is actually just about efficiency. It is also about building a whole new market for tokenized assets that could hopefully unlock trillions of dollars worldwide. And I know this is probably going to be inflationary for two very important reasons. Number one, well, okay, it's obvious it is going to free up literally trillions of dollars. And number two, this whole process, and also I would say mainly the Genius Act, is going to increase the money velocity big time. And that will most likely, in my view, cause another massive wave of inflation. And what will that do to asset prices? You know what? Let's actually not get down into that rabbit hole. Let's just talk about this article, because if we talk about inflation in the coming years, I think we are going to come up with some insane numbers. Anyway, now let's talk about where Quant fits into all this situation, because this is exactly where things get kind of interesting. You see, at the end of the panel, Gilbert Verdian, the man himself, summed it up perfectly. He said, the biggest challenge isn't building new technology. It's actually connecting the old world of finance with the new one. And the panel made it very clear that basically the Big Bang approach, like the one that we had in Australian Stock Exchange, okay, these aren't really going to work. And you simply cannot rebuild a whole financial system overnight. The only way moving forward is going to be incremental practical implementation. And by that, you probably know what I'm about to say, right? We are talking about linking new blockchain systems to old financial infrastructure piece by piece and step by step. And that, my friends, is exactly to the T where Quant comes in. You see, Quant isn't trying to be another blockchain, and I'm saying this for those of you who are new viewers. Those of you who are regular viewers, you probably know what is going on in here, but these days, believe it or not, in every single new video that I make, about 80-85% of you guys are new viewers, so I feel like I should explain this in every update. You see, Quant is not trying to be another blockchain or maybe a new exchange or a bank. Absolutely not. Quant is essentially the connective layer, and by that we are talking about the bridge that lets traditional systems and blockchain networks talk to each other safely and very much efficiently. Now, here is a simple way to picture this whole situation. On one side, you have institutions like, for example, BlackRock and also London Stock Exchange running on old complex systems that weren't built for digital assets. Number two, on the other side, you have newer networks like Finality and tokenized assets that live on modern blockchain rails. And point number three, the problem in here is that these two worlds are not really able to speak the same language, and Quant's overledger and Quant network act like a universal translator sitting in the middle, and it's basically going to let traditional financial systems interact with tokenized assets without really needing to rebuild every single thing from scratch. And that, my friends, is what makes it, I would say, more realistic of a solution for large scale adoption. And it's basically going to be a plug and play situation for institutions that want to just evolve without really taking any huge risk. So to sum it up, if you also give this article a read yourself, I think you are going to realize that there's actually a big signal in here that suggests institutional adoption is actually now shifting gears, and Quant's technology fits perfectly into the plan that they have. And that, my friends, is definitely a bullish development for us, but it is also at the same time very much realistic. And the process, I fully understand, it is going to take some time, and you shouldn't really expect something huge is going to happen overnight. I don't really think that's realistic, but we are, I would say, absolutely on the right track. And if you follow the news, I think you are going to come up with the same conclusion as me. Fundamental wise, in QNT, we are looking very much optimistic, and the future is absolutely bright. So again, I would like to say it, if you got some time, definitely give this article a read yourself. You are going to find a lot of fascinating points in here. Now, what is going on in terms of technical analysis, and by that we are talking about specifically what is happening in very short term, because if you remember the last time that we talked about QNT, I think we were right around these areas, and the idea was that under any kind of circumstances, we do not want to see Quant breaking this very important support level, which is from weekly and daily time frame at the same time between, let's say, 76 to about 80 and a half dollars. And it's actually, in my view, a very good thing that we are kind of seeing a bit of a bounce back from this level, and hopefully this is going to be the beginning of a bullish setup. Is it though? Let's go on Coinbase's chart, and the reason that I like now Coinbase's chart is that in it, as you can see, we do not have those insane shadows that we got in Binance's chart. And I think the last time that we talked about QNT, we specifically talked about this structure being hopefully a 1, 2, 3, 4, 5 wave impulsive movement, and we said, okay, let's get a very slow and choppy move down and then a rather good bounce back. If we get that, great sign. Also, at the same time, it's very important to note that we do have a couple of very important highs quite close together, and I am willing to bet that above the highs we do have a good amount of liquidity. Why is that? Because you see, this is essentially, you can argue, a trend line, and every single time that we touch the line, we got some sort of a reaction from it, which makes me say, well, okay, odds are right around the highs. A lot of amateur short-term traders did open some short positions in case we get another move on the downside, and most of them did actually put their stop losses above the highs. Hence why I said most likely we do have some liquidity in here, and the price unfortunately has a tendency to, in this specific scenario, go up and gather all the liquidities and basically make those short-term traders cry. So this, my friends, is why, in my view, we are probably going to get a continuation of this move up in the short term. And by the way, here is another reason to be optimistic. I think you can sort of kind of safely assume that this is a correction structure, maybe in form of like an ABC zigzag. So essentially what you have, 5 up, correction down. This is essentially a bullish setup, suggesting the next move, yes, it's also going to be on the upside, which in it we are going to take this important high. And on Coinbase's chart, this is about $88, but I think we are probably going to go quite a bit higher than that, maybe somewhere around these areas, about $95 to $100. Why? You see, in terms of classic patterns, I'm not really sure if you are a fan of them, but if you are, well, I think we can argue this is a bit of a head and shoulder structure, and maybe this is confirmed, right? Let's actually go on trading views chart, because in the short term there we do have better looking candlesticks. There we go. Okay, so let's zoom in a bit more. Okay, yes, I do believe we can say this is a head and shoulder structure. And did we have a pullback to the broken neckline? As you can see, yeah, I'm gonna say actually probably not yet. So it does, in my view, make sense to have some sort of a slow and choppy pullback and then get a continuation of the move up. And in that case, this is on 30-minute time frame, by the way. You can say maybe this is 1, 2, this is another 1 or 2, but on a higher degree relative to this one. And the next move is going to be a good one up into wave 3, 4, 5. And according to this potential head and shoulder structure, what's going to be our target? First things first, you have to put your chart on regular scale and then measure the height of your pattern from here to about this area, and then put this thing at your breaking point. As you can see, this is giving you about like a $96, $97 QNT, but I think a better area to consider is probably going to be around this region, about basically, let's say, $100. So in the short term, for the next, I'm going to argue probably 10 to 15 days, we should hopefully have a continuation of this move on the upside. And then what really happens is actually the key. Why? Because if you want to be optimistic in QNT, and let's go around here, okay, you see, if you want to be optimistic on any chart and argue, you know what, we have hit our final low, okay, fair enough, off of the lowest low, you have to be able to find them a 1, 2, 3, 5. This specific count is called an impulse. Rules for it are: we should not have overlapping of the waves between R wave 2 and 4, and in any kind of 5 wave, R wave 3 should not be the smallest wave. And in terms of the subwaves, I think you know it. We have to have 5 wave up into wave 1, 3, and 5, and for wave 2 and 4, we can have different scenarios. Let's say sure, ABC into wave 2 and a WXY into R wave 4, and let's go on the lecture. Okay, let's assume that we are lucky and we are going to get a move on the upside, and let's even be optimistic and say this is hopefully going to be a 1, 2, 3, 4, 5. At that point, because also this initial move off of the lowest low is a 5 wave, you can only argue maybe this is our wave 1, 2, and 3. Question: where is your wave 4 and 5? That's actually the thing that you want to see in QNT after having another, rather I would say, a strong move on the upside. So if you get after this phase up a consolidation pattern into your wave 4 followed by another move into wave 5, you know what, that is going to be an awesome sign suggesting the bottom is. What you do not want to see is maybe after having another phase up and maybe even not that much of a strong move, maybe a strong move on the downside, a 1, 2, 3, 4, 5, in order to take this important low down here about $81, because that is pretty much going to confirm that unfortunately, well, you do have a 3-wave movement and ABC, or basically let's say a correction structure and not an impulse, suggesting, well, our move down in the short term at least is going to continue. But for now, as long as we are not proven otherwise, let's be optimistic, and in like very short term at least, let's count on this move up, and then we are going to make new updates and see what might be the next likely move. And I hope I explained everything well and you understood what is going on in QNT's price chart. Anyway, if you found any value in my content, I would really appreciate if you like this video and consider subscribing to my channel and follow me on Twitter. And if you want more, maybe you want a complete analysis for your own specific crypto, or maybe you want to learn some decent TA in order to be able to make good money in the markets, you can become a member and ask me anything you want. And until the next update, I hope you have a wonderful time with your family and loved ones. Goodbye.